You're probably sick and tired of inflation, but what if I told you there's a way you can make money from inflation going up? Disclaimer, this is pretty unethical and this is not financial advice, but I'm going to explain what a delta neutral inflation strategy is. Let's say, theoretically, inflation is really bad in Mexico and you want to make money off of it. What an individual could do is they could short the peso. This would mean that they have downside exposure. If the peso loses value, they make money. What they could then do is buy an inflation-linked bond in Mexico. These are denominated in pesos and typically appreciate the worse inflation gets. The reason it's called delta neutral is because there should be zero change in the value of your portfolio as the currency volatility swings. In theory, the lower one goes, the higher the other side should be, such that zero net change exists. The next valid question, what is the point here, right? We're aiming for delta neutral. That means no change, no opportunity for profit. Well, if you recall, we bought an inflation-linked bond. That means the yield of this bond goes up, the worse inflation gets. Because you have a delta neutral strategy, that means all you do is you collect the premium or the yield from the inflation-linked bond. This strategy can be very hard to execute on your own because you need proper position sizing, you need great risk management, and you usually need some kind of programming skill to fully automate it. The chart above my head shows the yield that the bond would provide in a riskless manner. That being said, this is a fundamental strategy to some of the biggest hedge funds in the world and likely not a strategy that you can successfully emulate without the right resources.